Now, what levels our experts are eyeing at the moment? Rajesh Palviya, Head of Technical and Derivative Research at Axis Securities, is with us today to talk about the levels on the markets, and of course Sudhir Bandyopadhyay, Group Chairman, IndiTrade Capital, to talk on the fundamentals of the company. Welcome, gentlemen. Good afternoon to both of you. What an exciting week it was. Of course, we saw record high. First, I would like to talk about the levels, and Rajesh, wanted to understand because, of course, the weekly closing looks very strong. We have closed about 22,000 levels, and support has also risen to levels like 22,100, 22,200. From this support, now, what do you make the markets now? Since we understand that the FI's exposure is still below 50%, what do we make out? Looks more short covering coming week?
Good afternoon, Priyanka. Very strong momentum throughout the week. Though index was volatile, but if we analyze the broader market, it was on the buying side only. Most of the stocks on the large cap space as well as on the mid cap space has shown very strong really throughout the week. The kind of confidence, the kind of flow which we are seeing on the street, that clearly shows yes, towards the end of this FAB series, we are likely to see further more traction on the buying side, and possibly Nifty can scale up to the level of 22,400 to 500 also in the continuation of this uptrend. Though there was some pressure on the higher side again on the Nifty, but still if we analyze the overall structure, 22,100, that's the important level on the Nifty spot. Till these levels are intact, we expect that towards the end of this expiry for FAB series, we can see a level of 22,400 to 500 also in the coming days. Bank Nifty was witnessing some bit of pressure on the high side again and again. It's failing to cross 47,200. That's the major call concentration area. So looking at the near-term setup, till Bank Nifty not crosses above 47,200, some pressure is likely to be there for some couple of trading sessions. Once we able to take out those levels, then yes, there could be short covering rally we can witness in the Bank Nifty also, and then possible target towards 47,600 to 800 will unfold going forward. But on the downside, 46,500 is likely to act as a good support area for near-term trend, as the most of the put writers are taking their position around those levels. So 46,500 may act as a good support area in this decline for Bank Nifty. So buy on dips should be your strategy for both the indices at this moment.
All right, thanks for the view coming in, Rajesh, and this is Snehi also joining in the conversation. Sudeep, let me come to you now. Let's talk about two of the sectors that gained the most in the week that went by, and that happened to be realty and pharma. Both of these sectors have hit their record high sometime during this week. Do you think this rally in realty and pharma is likely to sustain when we go on to the next week? And particularly, I want to know about realty as well, because the realty cycle has been going on for quite some time now. So do you think there are more legs to this rally as well?
Well, I believe as far as real estate is concerned, there are two distinct segments. One is the high end, the other is the affordable and the mid market. Now, what has happened over the last almost 18 months is that the high end has been really moving ahead, and there has been huge amount of excitement, fantastic sales. And pretty much all the developers have benefited significantly from this upswing in the high-end segment. I believe that while that is continuing for some more time, at some point of time in the near future, mid-market as well as the affordable segment also will start picking up. We are looking at an interest rate reduction somewhere in the horizon. One can't predict with certainty that when that will happen, but it's bound to happen. And as and when that happens, the interest rate sensitive segments, which is the affordable and the mid market, that will start picking up, and realty will continue to benefit. So the way we have seen realty has seen the big benefit of the top end of the market. Now time is coming in where the top end will stabilize, where the mid and the lower end will start getting exuberant. And this entire overall the sector exuberance probably can continue for another 12 to 18 months. That's our reading as far as real estate is concerned. As far as pharma is concerned, I believe pharma is again a widely diverse universe. There are multiple segments, and each segment has their own challenges and opportunities. So one can discuss that separately, but by and large, I would say pharma also is in a good position. And if you are talking about next week, of course, pharma and realty both should do well.
that's an interesting view coming up. Sudeep and Rajesh, request you to both stay with us. We'll slip in for a short break. We'll come back more to talk about what lies for the market ahead. Welcome back to Watching Your Trades, and now we have Rajesh for the technical aspect and fundamental aspect. We have Sudeep with us talking more about what lies ahead for the markets next week. Sudeep, one very interesting trend which we saw this whole week was that the rally was somehow limited to the large cap names and few of the large cap names only, and broader market of course underperformed. That's though they came back, they made a comeback, but then is that worry seems to be over now? And also, do you see a bullish momentum for IT pack considering the kind of move Nasdaq is showing? IT also made comeback. What is such your view lies for large caps as well as mid caps?
Well, as far as IT is concerned, I'll probably prefer to take your IT question first. NVIDIA is a unique company, and I don't think we have anything similar or even remotely similar to NVIDIA in India. So to expect the NVIDIA-led rally to translate into Indian IT companies gaining, I think is unrealistic. So we don't have to go there. As far as Indian IT is concerned, to a great extent it will depend on what's happening in US, because 50% plus of their income does come from US. That's pretty much for all the companies. And the way the US economy is poised, we strongly believe that there is a positive momentum back in US economy, and Indian IT companies also will see positive movement in the next fiscal. So that's pretty much on the IT. Of course, there are niche companies which are doing well and will continue to do well. When I say niche, I mean, let's say companies servicing travel and tourism like RateGain Technologies, Forge. Now, there's a boom in travel and tourism, so obviously these IT companies will do well. There is in automobiles, there's a transition happening from IC to EV, and some IT companies are aiding that transition. Persistence is involved there. So companies like this will continue to do well, but beyond that also, overall things should improve. As far as the debate between mid cap, large cap, and small cap, I strongly believe that time has come now, at least in the current calendar year and next fiscal, where we'll have to be company specific, not the large cap, mid cap. There are a lot of interesting companies even now available at reasonable valuation. I won't say cheap, but reasonable valuation, considering the growth potential. So we should probably leave aside this large cap, mid cap debate and focus on counters. And we will have to be driven by a company-specific news flow in the coming days.
So they're coming in. Rajesh, I'm going to come back to you and let's talk about the entire banking space, because what a paradox we've seen right over the course of the last week. PSU bank sector up 1% almost. Nifty bank sector up 1%. Nifty PSU bank sector almost down 1%. So, and we've been seeing that PSU banks have been lagging over the course of the week. Banks, however, when we talk about private banks, are doing pretty well for themselves as we speak. So if you had to pick between the two, are you going to place all your bets on the private banking sector or the PSU banks, and what should our viewers do going ahead, and how should they navigate this entire banking paradox that we're seeing right now?
We've seen throughout the week there was a volatile week for most of the banking stock. Though some of the private banks have done well, but still, if you analyze the overall sector under pressure, it was there. Some of the private bank that we like at this moment, that is ICICI Bank, is our preferred choice at this moment. Overall structure is bullish, though some pressure was there on the higher side, but still stock is showing good strength on a weekly as well as on the monthly time frame. So till ICICI Bank is holding about 1040, 1030 mark, trend is likely to remain on the bullish side, and we believe that this stock outperformance is likely to be there from the private sector bank, and possible target we can see on a higher side towards the 1120 to 1140. If we talk about the PSU bank, yes, some pressure was there in most of the PSU bank, but still, if we analyze the longer term time frame, most of the stocks are still enjoying above their breakout levels. Stocks are trading above to their short term, medium term moving averages. So this corrective move should be used as a buying opportunity in most of the PSU banks. We like Canara Bank at this moment, though some corrective move was there, but still in this correction, if you get any opportunity to buy Canara Bank towards 560, 555. So again, that's again attractive level to re-enter in this stock. As overall structure of Canara Bank is on the bullish side, then one can keep stop loss of 535. On the high side, once the stock crosses above 605, possible target we can see towards 640 to 650 on the Canara Bank. Another stock from PHU basket that we like is PNB, Punjab National Bank. This stock is consolidating a very narrow range, and the strong behavior is clearly indicating that once bank nifty or banking stocks settle down at certain level, PNB can continue its outperformance, and possible target we can see towards 145 to 150. So PNB is another stock where one can buy and accumulate with stop loss of 122.
Quite an interesting trend which appears in the banking space. But Rajesh, where would be the money-making avenues for the coming week? What will be the top picks?
So first stock is JSW Energy. On a daily chart, stock managed to give breakout of its consolidation range, and looking at the overall structure, stock is in uptrend. Stock is enjoying its all-time high trajectory. So we believe that JSW Energy can show some traction in the coming week. 540 could be the possible target. One can buy this stock with stop loss of 495. Another space that we like is real estate, and from that space we like Godrej Property. If we analyze the overall structure for Godrej Property now, stock is on the weekly chart, stock is now forming a rounding bottom sort of formation, and stock is on a verge of giving breakout of its previous swing high. So looking at overall structure for Godrej Property, long build-up was there in today's session also. We expect Godrej Property can continue furthermore upside. 2550 could be the possible target, and we can buy this stock with stop loss of 2430. And the third stock is from Automobile Pack, and that is Mahindra and Mahindra. Clear outperformance is there. Stock is enjoying its all-time high trajectory. The kind of traction which we are seeing in the Mahindra and Mahindra, that clearly shows towards the end of this FAB series, we may see levels towards 2000 also. So one can look to buy this stock also, Mahindra and Mahindra, for upside target of 2010. Keep your stop loss of 1900.
Rajesh, Sudeep, thanks so much both you gentlemen for joining us today. With that, we'll let you go, but let's get in the word from the wise, and we've managed to speak with a whole host of experts this week, but one such voice is Chirag Setalwad, because he says investors must not be deterred by small hiccups in the market, and he's from HDFC AMC, so that's the word that we got in. He also adds that India's growth story is genuine at the time when the world is